Okay, next slide then. So salary sacrifice. So salary sacrifice is obviously widely used primarily for pensions, but also for other assets as well, such as company cars. The budget has obviously announced that the limit for NI relief is essentially going to be £2,000 per annum if you're using salary sacrifice. So what that will mean essentially, beg my pardon, and that's from April 2029. So if you currently have that operated, you are okay for another, 3 whole tax years. So milk it while you can, essentially, because after that, it's going to be reduced to £2,000 per annum. On rough calculations, on the basis of a 5% employee contribution, it's around a £40,000 threshold salary. Obviously, that will change depending on if the employee puts in more than the standard, and depends on if you put the pension in based on the whole salary or qualifying earnings. But essentially, if that rate does come in at £40,000, based on the minimum wage discussions we were having on earlier, there's not that much of a premium really between the minimum wage threshold of 30-ish in 4 or 5 years and the 40,000 threshold where there might be sort of tax implications. So it does appear to have been set at a very low level, and it will affect more people than they'll maybe admit.
Yeah, they definitely. I think they said it won't affect the average earner, didn't there? Was the comment?
Yes.
But like I say, it feels like more it's set up to include more and more people for sure.
Yeah, and it's probably a bit politically unwise in some ways when it's widely understood that pensions are underfunded, and this is only going to reduce funding to pensions. Plus the fact of whether state pensions are affordable in future is another matter. It just seems to make a perfect storm to me, but well, we'll see where we go with that one. But essentially the rules as they are is if an employee was contributing more than £2,000 per annum from 29 onwards, they'd get NI relief for the first £2,000 per annum, and then the remainder would be assessed as usual. So essentially there'd be employers NI of 15% on any balance above, and the employee would pay either 8% or 2% depending on where their earnings fell on that amount. So essentially that could be an extra 20% to HMRC on quite a big amount of money. It's important to mention that regardless of the level of your contributions, the individual will always receive income tax relief, whether they put in £2,000, 22 grand, whatever the number is. It's just the NI implication that this measure is going to affect. And at the moment, there's been no mention of the salary sacrifice cap widening to anything other than pensions. So the concern was essentially whether it was going to be impacting company cars like electric cars. And it hasn't at the moment. I suppose there is time between now and April 29 where the scheme could be widened, and it may be that that's brought in later. But at the moment, that's not in the news that that's going to be included. Do you have any comments on that one, Sam?
I suppose just like confirming. So, because obviously there's the on a 40k salary, the employee would contribute 5%, and the employer would also make a contribution as well. The cap's not the total amount. Is it just the employee side? Do we know that yet, or?
Yeah, so it's the employee side that will be affected, not the employer.
Okay.
So if there is just an employer contribution, if there was a scheme theoretically where the employer paid X% and the employee paid nothing, then it wouldn't be caught by this. It's only where you've got the salary sacrifice arrangement, which is quite common in terms of you'll say, well, I'll sacrifice 5% of my salary, I believe it is for employees, and then essentially that comes off your gross pay. The employer then pays it across as an employer's pension, but it's at the first instance, it was an employee pension.
That makes sense. And I suppose another thing, and it does, obviously, when we act to our clients, our aim is to advise on ways of optimizing the company's tax position. So one thing that we've really been promoting is the benefits of salary sacrifice, because, like you say, especially when the national insurance increase went through, it is a good way for businesses to reduce their national insurance costs. So I suppose the key thing there is it's still there for the next 3 years, uncapped. So any business who probably employs over 7 or 8 people, it really does vary. Because you could have 7 or 8 really high earners, but like I say, if you take 7 or 8 people around the the 40k mark. Anything over that, then salary sacrifice is still and will be for the next 3 years a really good scheme that will allow employers to save on that national insurance, and it is a win-win because the employee will save as well on how it's calculated. This is talk's not really hit there to focus on that, but like I say, if anyone wants to know more about that, we can run calculations for you to say, okay, this is your current national insurance bill. If you switch to salary sacrifice, your employees would all be better off. If they earn over 50k, it's marginally better off. If it's less than 50k, it can be a few £100s a year, and then you will get a saving per employee as well. So it's still there for the next 3 years. So again, opportunity to